Ma'am, the first question from my side to you would be, the corporate India is basically thinking that the economic sentiment is going down in the country. At the same time, government is saying that the economy is poised to recover. The best example could be Maruti Suzuki saying, cutting the forecast for the Indian automobile industry for the next 3 years. Yeah. It says that the growth is going to be in single digit till 2015. Yeah. So how do you see the economy right now?
Well, certainly right now, we all know that it's sub 6% growth. I'm certainly of a school which believes the bottom is probably reached now, because just given our existing savings rates and investment rates, to do worse than this is not possible. So from here, is it going to stay at this level or go up? I would certainly believe up. We have seen, for example, just in the last month, quite a significant turnaround in sentiment. It's happening on the back of what is initiatives on the policy level. So FDI, of course, has been a big one in retail, now the banking bill and the companies bill going through. Each in itself a significant event, each in itself not bringing growth today, but what it does is it changes sentiment. And with every new bill that is going through, and it's showing that government collectively, Parliament collectively, is certainly now in the mood of getting India back on track, that they can sit till late as they did last evening to see the passage of these bills, to me is the new India and the India we want, where people are working collectively to ensure that we can get things back on track. So that change in sentiment is what was reflected in the stock markets, which, as you know, popped up, and it's, I think, reflected in a cautious optimism that is returning.
But aren't you worried about the political instability, ma'am? Because we have Lok Sabha elections coming up in 2014, and these moves are being seen as populist rather than, sustainable. And there every possibility that the next government might be a coalition as well.
Yeah, but I'm going on the assumption that we will have coalition governments for Kingdom Come, and we have had coalition governments, and we've had coalition governments that have delivered. So I don't think the issue is around the fact that it's a coalition government. The issue has been that we have had moves, policies, for whatever reason, either because the parties weren't talking to each other or because there was obstructionist politics being practiced, but the long and short of it is nothing moved. Now we are seeing that engagement, and people have a right to disagree with things.
Right.
Not everybody has to agree with everything, but discuss it, thrash it out, drop things, move on. And you saw that in the banking bill. It really wasn't, to my mind, a huge matter whether we had commodity futures in there or not. And to drop it and allow the bill to move ahead was important.
Right, ma'am. Do you think this is time for RBI governor to basically support the government and take some sort of rate cuts? And as a banker, do you think there is a need of that kind of a liquidity, because we are still in a concerned mode about the economy?
I think growth has to be a very important part of the agenda, and I think where RBI comes from in terms of watching inflation is quite a serious concern for RBI. So they have to look at inflation. I think the concerns there are also in terms of, so what is the government doing on the fisc? And let's make sure that the government does what it has to do on the fisc before we begin to bring interest rates down. So I think as actions now come in and come through on removal of subsidies, however slowly, but at least directionally right, on the right moves therein, we will see some of the advantages of those policies, because those are good for the economy, but they are also therefore what RBI wants to see before the interest rates come down. So I'm quite hopeful interest rates will come down. The good news is not going to go up. They have actually been pretty flat for a while. Liquidity has been gradually increased into the system, and I would say maybe over the next year about 50 basis points, not more. So it's not going to be a huge climb down, but at least the direction would be downwards now going forward.
There's also a view from experts that the kind of growth we are expecting in the next year and a half, that the demand for that growth is already there. That's the pent-up demand which we are talking about.
Yeah.
What is going to happen after that? You have elections coming in.
Yeah.
Election
years are good years. If you look at the way industry does in election years, it actually does pretty well, because there's somehow more spending happening in the system, and demand actually goes up. Political parties spend in the system, and that helps demand Maybe it's rural demand, but it's all demand. So election years are not bad years for India if you look ahead.
Ma'am, you talked about banking bill. How do you see that changing the sector? I mean, do you expect more and more corporates coming in? Is there a completely drastic change in the sector? You expect
Hard
that?
to say. I think all that the banking bill has done is set right certain things that needed to happen. So bringing voting rights closer into line with shareholding, which is something which is just better governance, frankly. It's brought in the governance structures that enables RBI to look through the bank at the associates and subsidiaries that the banks have. So yes, to the extent that it's a corporate that gets a license, the ability of RBI to look at the group as a whole is something that RBI required. So it's brought in the frameworks which now enable RBI to announce the policy for new licenses. So we have to see what those policies are. And believe me, I'm sure they're going to be pretty tight, because the rules for fit and proper, who is fit and proper to promote a bank, are going to be very seriously scrutinized.
This bill sort of change any sort of strategy in the established banks? Do you have to take a sort of different route just because the competition is going to get intense?
I think we have such a huge underbanked population in this country that actually we need more banking in the country to grow in tandem with industry. So thus far, we've managed, and we've managed well. My concern has always been that 70% of the banking sector in the country is with government, and government that has its hands tied behind its back with a fisc at the levels it is, does not have easy money. Of course, if it wants to put the money into the banks, it can, but then it's having less money to put into something else. So thus far, they have been able to support their equity structures as they are and hold on to the equity holdings in the government-owned, the PSU banks. But does the government need to own 70% of the banking sector of the country? I think they should own some. So do they have to own all the banks? Can they not own just some of them? Can the percentage come down? All of that enables that money to be available for social schemes. So my worry is if this approach of hanging on to 70% remains, then the banking sector is going to get starved of funds, because that 30%, which is the private sector, will continue to grow, and it grows beautifully. It raises money from the capital markets readily. It's favored by the investor community. No issue. But the government-owned sector, which could actually also raise money from the capital markets, is not going to be able to, not because there isn't demand for that stock, because they're well-managed banks, but because government wants to hold on to its equity holding. So where do they go? In a Basel III environment which requires more capital, what happens next? So then we will need more banks. We need new banks who can bring equity. So the balancing act here is we need more banking. Where it comes from.
Not banks?
There are many options. Well, if it has to be more banks in this model, where 70% is constrained for growth, it'll have to be new banks. But if I were to have a vision 2020 of what the banking sector should look like, I think we need some bigger banks. So maybe consolidation. I mean, India, at the scale and size we are, should have some banks that are in the top 100 banks of the world. China has 6. So let's at least work towards some bigger banks. Maybe that will come through consolidation. Maybe we do need niche banks also, banks that service rural markets, banks that service agricultural sectors, because they know that business.
That's all, ma'am.
Yeah.
Thank you.
Thanks.
Thank you very much.